The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days, that is, at 877-927-6648. And it is the Tiger Technicians Hour. And 877-927-6648 is the number to call. I'm going to throw out the international number. Oops, I said that and then I lost the international number. It used to be right here. Wait a minute. International number. Oh, you know what? I don't have it in front of me. Oh, there it is. 727-445-1044. The international number. Okay, let's get to the nitty-gritties. The E-mini down $1.50 at 1835. 1840, round number high just the other day with the doji, and the 120-minute chart made a peak D at the doji, and it's in a rectangle formation. The rectangle formation means what? It means that even if you see the technical slide as you do here in the MACD and the slow stochastic, if the price holds the left side base of support, in this case it's right there, 1833.25, the low today so far 1833.50, there's a good chance you can go sideways with a chance of breaking. The longer you hold that rectangle without strength to the upside, the greater the chance you will break that support. So 18, what I'd say to subscribers, every day in my opening call, I give parameters for the E-mini. I don't give a trade. I give the parameters. I think that's far more beneficial. I look at the larger picture and I say 1844 to 1846 will be very strong resistance. I look at the downside and I say 1831 to 1829. That's the support level. In the near term, the 120-minute chart is just basically saying 1840 to 1834. Well, 1832 will be the parameters to watch. And as I look at this, I'm gauging whether, and I'm going to put it in here. I'll take a chance because everything seems to fit. Stochastic at 97%. I'm putting an up arrow. And what does that mean? It says that if correct, and I'm going to use the phantom peak of 1806.75 on the 18th of December, and on the 19th, 1806.75, and on the 20th, break out to the upside. So I'm calling this leg B, possibly peak B today in the E-minis. I'm going to run all these through very carefully because the Chapman wave methodology has worked for me, and of course it's inclusive. It includes many other techniques if you want to apply them to the Chapman wave methodology, whether it's Elliott wave or whatever. But at the same time, the simplicity of counting 4 higher peaks and then working out what's going to happen from there, that to me has been the greatest benefit of the Chapman wave in all these years. So what we did is we made a peak E. We had an instant restart way back in October, continued to 1805.75. That was peak E in the Chapman wave, the 5th highest peak, and it dropped in 2 troughs down to trough B at 1754. Then there was an incredible move to the upside. And in fact, we've only, if today there is no new high above 1840, I say from 1840 to 1840.25, 1840.25 breaks out and continues leg B. 1840 also continues leg B. But if there is no high above 1839.75 in the E-minis, that's going to be a peak B. Now, this is what I'm saying. If you look at the Dow, I have to do the same thing. I have to conclude at 97% in the stochastic that is really important and it is powerful, number one. Number two, MACD is still climbing. That's very important. On a very short-term basis, peak D in the 120-minute chart, MACD is just touching a little bit of negativity there. Stochastics pull back to 82%. Still okay. Price is holding. There again, you might get that rectangle formation. So let's just move this away. In the daily chart, I'm calling this, at least for now, peak B. leg B, peak B, if there's no new high in the Dow above 16,529.01. You go to 0.02 today, you've extended B. You go to 0.02 tomorrow, that starts leg C. That's kind of what I'm thinking. We'll see. Days young. The weekly chart is in leg D, and any move above that 0.01 starts a continuation this week of leg D. If in the entire week we do not break above, I've got to say the number again, 16,529.01, there's a good chance that you've made a peak D. There's no good chance. You have made a peak D. I don't think that's going to be. There's enough strength yet to move higher. So that's the Dow. Let's go to the S&P. So the Dow's up now at up 17 at 16,495. The SPX, that's the cash, continuous, also makes a peak E. Oops. This goes to a peak A. Now, I don't like to change the methodology. I don't have any choice. I'm calling it E/A in the daily. Wow, with the stochastic at 96% and the MACD still good, the implication is that if there is no new high in the S&P above 1844.89 today, but it happens tomorrow, the last day of the year, for leg B, you cannot get a leg D until probably Monday. So that means we've got until, now let me just do this. Where's my calendar? Quickly, calendar. Calendar, do I have the newest one? Yep, the newest one has 2014. So let's just do this. December. So December, today, I'm including today. So today's the 30th. So it'll be peak A in the S&P, peak B in the Dow if there's no new high today. That means a new high tomorrow starts leg B in the S&P, C in the Dow, and then you get Wednesday, which is the first, a holiday. Then you get the second, so that means that could be peak B and C. So then you've got Friday. Yeah, it can't be until Monday. Monday would be the soonest you can get a D in the Dow. B, C, D. Tuesday, in fact, would be the soonest you can get it in the S&P. Let's see what the NYA says. So the S&P is down 72 cents at 1840.68. The NYA is in leg D. Wow. I remember looking at this over the weekend and saying, are you kidding? That's A, even if you recounted FG. Well, so this could be for the New York Stock Exchange. So that could have been a G. We call that a G, just to be on the safe side. So that's A. Oh my, that's B. So this would be B. And has there been a new high today in the New York Stock Exchange, the NYA.X? That's 10,360.85, 84 by 0.01. Oh, all you need is 0.01 and you've paralleled that. Oh, I have to tell you, I don't think we're going to be making a peak, at least for the next few days, going into early next week. So let's just clarify. I don't want to take the time now to do all these different wave counts. The Qs have made leg D, and now it's possibly peak D if there's no new high above 87.90. See, this all works out. You can get an E and then an F going into late week. So we're going to watch this real closely. So the QQQ series is down 12 cents at 87.40. But I keep seeing strength come into this market. So I like what I see. I think the IWM also, stochastic at 90% MACD. I don't see anything coming to a conclusion just yet. I believe we've got at least most of the week to go, maybe even early into next week before we start to see a sell-off. Now, for those of you who are subscribers of mine, you know that I've been discussing, especially today, I gave you a special report about the monthly chart of the Dow. So the way I'm looking at it, there's a chance that we're getting really close to some kind of a deeper pullback. And then the deeper pullback says that we should pull back and then have a spectacular rally. So isn't that interesting? In the meantime, back at the ranch, what I'm looking at here is IWM is down 10 cents at 115.06. Needs to get above 115.97 to start another leg up. And the weekly chart is in leg F right now. And the QQQ series, I forgot to tell you, all those folks that listen, is in leg F. Could have recycled. I'm calling it F for now. So there's a lot of evidence that I'm looking at that says the rotational selectivity, which is suiting us with our longs in my opening call, that's my daily service. Some really nice gains in certain stocks. And we did go short today to the short. Woo-hoo-hoo, we're up 11 cents in the short position. Day's young. Anything can happen here. It was at all-time highs just on Friday, Thursday or Friday. So we're looking at this, and I'm saying it's a test case in this particular instance. Never shorted this particular stock before. We'll see what happens. Very tight, 2.5, I think, point stop, something like that. So let's go on, and we're going to go to gold. The GCJ. Down 840 at 1206.30. I don't really see anything. As far as I'm concerned, if I'm looking at my continuous contract of gold, gold has gone to a trough 1179 of the continuous contract and 1186. It hasn't broken to a new low. 1179, 1186. Hasn't broken to a new low below the left side low. Going to be watching this real closely. Let me just double check because 1179. Okay. So let me just use the GLD if you don't mind. GLD is down 79 cents at 116.33. Just keeps making this H pattern, big H pattern in the weekly chart. Now that went to 114.50. That did take out the previous left side low of June 28th, the week of the 28th of June of this year at 114.68. And what that does, to me that's really important, what that does is it goes to leg D in the monthly chart. Now the monthly chart is saying, watch this closely, because there's a chance that if there is no rally, that the left side, right side price time match, what I've been discussing for months, which has a left side low to right side, a low of the week of the 28th of February, would target the 102.28 area. Oh, I didn't even want to talk about that. That's way lower. That's 10% lower. No, let's just go one step at a time. Right now, the most important support level is 113.08 in the SPIDER, the GLD, which is trading down 80 cents. I'm sorry. You could bounce, and you could bounce very nicely, but I do see lower lows this coming year. So the bonds, let's look at bonds right now, having a nice bounce. They made a left side new low. They broke the 102.11 low of way back in August, was it? Of August the 23rd, 102.11. Last week it went down to 101.69. It's attempting to rally. I'll talk a little bit more about that because we've got leg D in the monthly chart as well. Basil Chapman, be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. So the Dow's up 19, S&P is about unch, and we're going to go over to Paul in, is that Braintree, Mass? Paul?
You got it.
Braintree, Massachusetts. Very good. So, how are you?
Not bad. It's a little chilly up here.
A little chilly, yeah, it sure is. Wow, we've had some miserable weather the last week and a half. Wow. Anyway.
Trying times for the winter.
Oh, boy. Let me tell you. I'm just not a fan of winter. Never been, and I'm not sure I ever will be, but you got to put up with it. But the funny thing...
south.
You can go south, but you know what's really interesting? This whole Boston area, I was doing some friends that were visiting from San Francisco area, and there are so many places in the Boston area that are so easy to get to. And if you aren't in peak traffic, most of the time you can get there fairly quickly. It's very convenient. So I think that there are a lot of benefits to put up with a darn winter. You'd like to look at what?
Listen, the winter only lasts 3 months.
Yeah, the worst part of the winter, definitely. It only lasts 3 months. And what can I do? If you live here, that's what you got. So I live here, and that's what I got.
I actually have 2 questions if you have time.
I absolutely do. Fire away.
Okay, the first thing that's always been on my mind for a while, and I wanted your opinion on it. The Dow Jones average is a composite of 30 stocks. Is that correct?
Correct, yes.
Now, I I know they're constantly changing the components in the Dow Jones average.
They are.
Now, when they do this, are they mimicking the numbers to look better than they really are?
You know, that is just a really very good question. I just want to show you something here. I wonder if I've got it in front of me. Let's see, that's the Dow chart. Am I going to find it here? Let me just grab a look. There it is. Okay. I'm going to show, is this the one? I've got tons of these things. This is what I'm showing. I'm showing here on Tiger TV. I've got a chart up. It's actually, this is a mix of a number of different things. The very first one is UNP, which is Union Pacific. Underneath it, I've got the SPY, that's the S&P 500 index, the trading ETF. Under that, I've got the GE. These are all weekly charts. Under that, I've got the Dow Diamonds. And under that, I've got the QQQ series. And under that, I've got the IWM. Now, what I would challenge anyone to do is to look at all these different indexes. And number one, they're all moving in the same trajectory. They are all moving higher. Some are a little smoother than others, but basically they're all making higher highs. And although I've got two stocks here, that's Union Pacific Core and General Electric, I've got the same sort of thing. Maybe I can use this one here. Let me just use this one. And the reason why I'm doing this is to answer your question, it's best to look at charts. And all I can say, there's the diamonds, there's the SPY, that's the monthly. And all I can say is this, that the Dow has had a habit, this is the Dow company itself, has made it a habit of choosing what they consider at certain points to be the very best stocks to put in. Invariably, these are stocks either at highs or most recently made highs. And to take out the ones that are they've been terrible, or there is a takeover talk, or there's something else that's going on, and they are now no longer acceptable. Now, if your question says, do they, that's the people concerned, do they make it a function of that Dow? And I'm actually looking at a chart of the Dow that goes back to 1890. Let me move this thing away here so I can see the date. 1892. And I could give you a whole bunch of things. For instance, back in, where was it? Oil found in East Texas. No, Henry Ford Automobile Company formed. That was in 1901 or 1902. I'm looking for, General Motors formed, but I'm also looking for the very big thing with Standard Oil. Where was that whole thing where they enacted that? So they have always gone toward United States Steel was formed. That was 1901. I just don't have it in front. There it is. Standard Oil. What year was that? That was 1910. So that was the breakup of the Standard Oil Company. And if you remember, there was the breakup of AT&T. So I'll talk, it's a great question, and I'll talk about the smoothing effect, but it doesn't change the trajectory much. I'll be right back with Paul in Braintree, Mass. We're talking about the composites, and to one of his questions, I'll be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back. Need to make one change to this as we're talking here. Just give me 1 second and then I'm all set. Okay, so we're back to Paul in Braintree, Mass. We're talking about the Dow. Now, one of the things that's different to the other indexes, as I understand it, is that the Dow itself is weighted on price. So that's different. It's not market value. And my suspicion is that's why Apple didn't come in, and that's why a stock like Google wasn't put in. Now, you've got to appreciate that they once put in Bank of America, and then they had to take it out. It was down 65% or something, I think, something like that when they took it out. So I've always joked that the Dow goes up despite everything that they do. They invariably choose the wrong stocks at the wrong time. And let's just look and see. Nike was added, N-I-N-K-E. Nike, yeah, since Nike's added, it's actually down. It's still acting very well. Monthly chart is in F/C. So let me answer your question. The answer is yes. I believe there is a form of manipulation going on. They obviously would like it to represent the stock market because it's been around the longest, and it's called when any news media says the market was up, they mean the Dow was up. That's just the way it is. But the S&P, obviously, with 500 stocks on the New York Stock Exchange, with thousands of stocks.
This is my question. Are you better off to look at the S&P 500?
Well, I look at them all in great detail, very, very great detail. So for me, It's the fact that they're going up together that's important. But they're both in leg D in my monthly charts. The Dow's in leg D. The S&P's in leg D. Funnily enough, the NYA, the New York Stock Exchange, is in leg D. And the New York Stock Exchange, this is very interesting. At this point, today's high is 13,361. The all-time high that was made in October, was it October or was it a little later? No, that was October of 2007, was 10,387.17. We are within 20 points, 26 points of that all-time high in the New York Stock Exchange. So it's just fascinating to me that they generally go up in the same fashion. But yes, you will get a lag every once in a while. For instance, the Qs are not even close to getting back to their all-time high from way back 5,000. What was it? The all-time high right now. Using the Qs. Let me go to the Qs. The all-time high was 120.50 back in March of 2000. 120.50 went down to 25.05. No, it went down to 19.76 in 2002, and then a slightly higher high, 25.05, and now the high is still only in the 87s. It's still way underneath, and I'd said at the time, in 2000, that the NASDAQ had made a high, which I will never see in my lifetime, tested. Wow. I don't know if that's going to be true or not, but it felt correct at the time. So, does that partially answer your question?
Yeah, just to add one more thing, I know these money managers, their bonuses are based on the performance of the Dow.
Yes.
I don't understand why it isn't by the S&P 500.
Actually, I don't know if that's a general rule anymore, because I think I heard just the other day a friend of mine, his son-in-law, runs one of the mutual funds at one of the big funds around here. And I believe that they use benchmarks. So it might be that the Dow is part, but it could also be the benchmark as it relates to their beating their other peers. I think that's more towards current bonuses. So that's a little different.
The bonuses are going to be rather large this year.
Well, that's the other thing. I was reading the other day that not all the bonuses will be, but who knows? I can tell you they get so many other perks that these guys, they do very, very well, and it's not an easy business. Believe me, they have to keep going. It sounds great when the market's up and all that, but as soon as you start getting a mixed market for a year or two, it's a very tough business. So, hope I answered some of your questions, Paul. Good questions.
Listen, okay, my other one, or you don't have time?
Yeah, give me your question, but I better go to my other two people waiting.
It's about the metals. I'm kind of looking at the SLV, but it looks to me like it's showing a potential bottom. And do you think it's going to be a better year, 2014, for the metals?
Okay, I'm going to answer that question as soon as I'm done with the other two people, but I'm putting it in. I'll make absolutely sure before we end the show, I will answer it. So, hey, great questions.
Great. Happy New Year.
And a Happy New Year to you. And thanks so much for listening, and thank you so much for calling. Thank you, Paul. Let's go to John in Knoxville, Tennessee. Hi, John. How are you?
Very well, Basil. Thank you. I'm calling about dry ships.
Yeah. You're calling just to rub it in, right? Just because we had it at $3.63 and the darn thing went to $5 without us. Okay. So it's made a peak F. Dry ships, DRYS, trading at $4.39, down 29 cents, down 6.20%. These things, when they move really. I spent a lot of time this weekend going through charts. I don't know how many hundreds of daily, weekly, monthly charts. And I did a whole section on shippers that I haven't actually looked at for a long time, not the usual names. And it's just fascinating what's going on in the shipping. And that's one of the reasons why I'm going to talk a little bit about the market overall as I see it relating to shippers, copper, and a whole bunch of things. I'll try to leave that for the last section. But let me just get to dry ships right now. Peak F in the daily at $5 round number high. And it's not just a high, but it's a high that goes back to, it hasn't been at this level since back in April of 2011. Huge move. Very upset that we missed it. We were right there. and I'd make the stop at just a tad too tight, and then it took off without us. The weekly is in leg D. Now, I have to say leg D, even though it's just 2.5 hours into the first trading day of the week, I have to wait until the full week goes. If it doesn't close above 5, then this is peak D in the weekly chart. But more importantly, and this is what I'm watching really closely, if dry ships, DRYS, trading at $4.39, suddenly makes the pattern that I call the Eiffel Tower, which is straight up and then straight down, and if it takes out 415, that 398 level is going to be so important, because at $4, the left side previous high of peak C in the weekly, with a beautiful, I did my analysis so nicely in this chart. I had it down that on the 20th of December, it should hit $4. Well, it just missed it on the 20th. It went to 379. The next day it went to 394, and then it broke out. So the analysis was right. All the different patterns that I use in the Chapman Wave methodology. But now it says that after this Chapman Wave cup and ladle breakout, which usually goes to D, well, it's gone to an F. At least I'm calling it F for now. If it breaks down and it starts to trade underneath $4, we might have to wait a couple of weeks before it rebuilds energy, and that could coincide with some kind of a market decline. That's number one. Number two, if dry ships in this particular phase right now just gathers itself, forms some kind of a base, and then starts to break out above $5, that monthly chart is going to improve tremendously. Now, what, you don't have it, right?
Yes, I do have it.
Congratulations.
Yeah.
So,
Thank you.
You have it at what price? Down in the 3 something?
It was like 384 or something like that.
Okay. So now that makes it a lot easier. Not easy, but a lot easier. And this is what I would explain to you. If over the next 2 days it doesn't take out the low of Thursday, which is 426, but instead starts to trade between 444 and 455, that's the action you want to see. And then what I would say to you is stay in your position, and some part of it you can use if at any point in the next week and a half, if it takes out 5, in some part of your position, I would raise the stop to about 475 and keep it as a trading stop of about 28 cents to the rising price. That's just a little part of your position. Why? Because that would be acting very well. I would even suggest that if it broke $5 and went to 501, you could add a very small position, and that would be a trading position, because if it breaks 501, that kind of momentum should take it quickly to 509. And then I would put a stop, maybe a penny below your entry point. Keep it real tight, because that trading position could actually make you a nice extra bit of cash so that you can keep your position that you got much lower down as a core position. Now, on the downside, if it takes out 415, I would say to you, watch real closely. You don't want to give up those profits. But at the same time, if this is a breakout that's building momentum to start moving even higher, because it's a big move. Last week was a huge move. Then what I would say to you is, I'd watch that 415, 412 level, because on the one hand, I'm going to say to you, maybe you want to take a little bit off to at least keep your profits. And on the other hand, is if it gets there, it can mess around with you and then suddenly move to the upside. And now you've lost your position if you had to get out of it. So this is very tough with a move so quick and a pullback from $5 to $4.39. That's 61 cents in just in the blink of an eye. So that's a big percentage move. I would try to protect my profits. You can always come back into this. I would just say that at 412 to 415, I would definitely take a little bit off. I don't want to give back kind of profits. And then you'll still have your core position, and you can always add to it. So on the upside, if it holds very well and moves to 455-ish in the next day or two, 444 to 455, that's good action. If it takes out $5 at 501, I'd add just a little trading position and I try to make a little money so that I can keep my stops tighter and I can use that to go in and out. But on the downside, 412 to 414, I'd say just you got to be careful. I hope that helps you.
Yeah, Basil, do you like that sector?
I like the sector very much. My biggest thing.
I was looking at a couple other shippers there, like NM, Nancy Mary, and David Sam X-Ray. I mean, they're all...
Yeah, you see, I did a lot of work on these. This is Navios Maritime. That's also had a huge pullback from peak F in the daily, but it's only peak C. It might be F, but I'm calling it C for now in the weekly. I like this group, but they have very big moves, and I'm saying to you, and DSX, did you say? Yeah, it's the same thing. Sir. DSX has just made a peak E, very sharp pullback. I like them. I suspect that if the market doesn't make a top in the next day or two, but instead it's going to go to early next week, these guys should, in fact, hold very well and should try to push higher. But you got the best move out of the bottom, so that's what I wanted to deal with. But entering into the positions now, the risk-reward is... I couldn't even tell you how long I spent on all these different shippers. It's tough because it's like a spring-loaded move to the upside. But if they give that back quickly, that's not a good sign, and that's what they're doing today. So I've got to say, be a little bit careful. Try to maintain your profits. Let's look at this again. It won't be Wednesday. Let's see how it goes through Thursday. Give me a call Thursday, and we'll look at them together.
Okay, Basil, it's so nice to hear you in good health again, and I hope you continue with getting better.
Thank you so much, John, and a happy, healthy New Year to you. Thank you so much for calling.
Same to you, Basil. Thank you.
Good. Thank you. Let's go to Warren in Denver. Hi, Warren. How are you?
Good, Basil. Good that you're back, too, like he says. That's fantastic.
Yeah, it's great to be back, believe me.
So I got ENB.
Yes. Now, are you along?
Yes, at like 42.60.
Now,
I was curious about what wave count you have on this.
In the daily, I've got it to peak C, and it's still acting very well, and it should go higher. And my target, folks, we're looking at ENB trading at 43.28, up 27 cents. Very good sign that today it's up, with the market really working very hard to maintain some kind of strength. I like this. My suspicion, I want to make absolutely sure I did that right. A, B, C. The previous move was A, B, C, D, E, F, and A, B, C minus, D, E, F. Okay. So what I like about this is the stochastics at 92%. I'm going to make the recommendation, stay in the position. What did you get in at?
42.60.
42.76.
Right where peak B, in the middle there.
Okay, so 42.76 to 42.54. That's very strong support. So far, it's acting. I like it. Now, let's just do something very quickly. The weekly chart is still early in its up move. You will know that you've got a fabulous H pattern breakout to the upside if within the next 4 to 7 sessions it can close about 44.79. Wow. If it does that, that's very good action. On the downside, if at any point in the next day or two it really starts to slip, that 42.48 is going to be very strong support. So those are your parameters. Now, the monthly has made a peak E, but this is a nice H pattern trying to move to the upside. I like it. I think it's a good position. Let's look at it again Thursday.
Okay, thank you, Basil.
Thank you so much for calling, Warren. And we'll be back with Garo and Dennis straight after this, and I will talk about the metals just as soon as we get back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tech Technician Sound. Let me just finish putting my notation here. A, B, C, going to D. Okay, great. Let's go to Garo in Newport Beach. Oh, no, are we on with? Yeah, we're on with Garo. Hi, Garo. How are you? Were we on with Warren? Or Garo? Oops. Garo.
Yes, sir.
Yes, hi, how are you?
Very good, and you, sir?
I'm very well, thank you.
Good. I'm calling. My question is very fast. I don't want to hold you very long. Regarding MasterCard, this is going to split 10-1 on January the 22nd. And I'm just waiting for that to split so I can, when it goes to $80, $90 or $100 a share, I can do that 500-600 shares at a time.
Yes.
At this time, I do 100 shares or 150 shares at a time.
Are you in MasterCard right now?
Unfortunately not, sir. Unfortunately
because it fitted all your parameters. All right, well, that's fine. I'm going to say that if you aren't in it right now, at least for the day, you're going to have to set this one aside. There's don't get in now. It's in leg D in the daily. And let me just double check. I don't want to put an incorrect notation. It's actually E. It's E in the 120-minute chart. I think it's ready for just a little brief pullback, but in fact, it's in leg D, very strong in the daily, very strong in the weekly D, and a G/C in the monthly chart. So I don't even think you need to wait for that. What I suspect, if there is a pullback in the next 2 to 3 days, and you can see MasterCard pull back to about 833, somewhere between 834.50 and 833.10, somewhere around there, and then it holds steady, and it starts moving up again, you can grab it for another quick run. The way it's looking, I'm going to give it about another 3 to 5 sessions, and then I think it's going to make a short-term top. So I hope that helps you.
That's all. That's all I wanted to know, sir.
Good. Thank you so much. And Happy New Year to you, and have a wonderful 2014. Let's go to Dennis in Tampa. Hi, Dennis.
Hi, Basil. How are you doing today?
Very well, thank you.
Hey, I just wanted to check back with you on Twitter and also take a look at Facebook if you got a minute.
Okay. I'm going to suggest that Twitter, you took profits in, didn't you?
Yes, I did. I got out of that before it took the real big slide on Friday, but I bought back in a little bit more today.
I'm going to recommend that you stay away just for a little bit longer. Let's see how Twitter trading at 60.31. Let's see how it handles the 56 to 55 area. If in between it has a rally and goes to 62.90 to 63.70, doesn't even have to fill the gap. I'm going to be watching it closely because there could be one more pop to the upside. I know people are saying there's nothing there, but the chart itself has just a little more residual strength. So I'm going to be watching it. But how Twitter can handle the 53 level over the coming week and a half is going to be absolutely imperative. And you want to quickly look at Facebook, and then I'll talk about the metal. Facebook may see so many stocks are making peak E and F right here. Peak E in the Facebook daily, peak E possibly in the weekly, very strong resistance, but only C in the monthly. Facebook is my favorite here. If Facebook could pull back between, it's a 54.12 at any point in the next 2 weeks or so, if I see Facebook start to break 51 to 50 support, I'm going to say just hold off, because if it can ever get down in the next 3 to 6 weeks into the 47 to 45 area, it might there get ready for another big move to the upside to make that leg D. I'd right now just be very careful with new positions, especially ones that are a little overbought. Hope that helps you.
Thanks a lot, Basil.
Happy New Year, and thanks so much for calling. Folks, now let me just do this one more time as we're wrapping up. The GLD. I'm suspecting that, yes, there could be a bounce from 116 to maybe 119. That's going to be imperative. If there is no bounce over 119 to 120 in the GLD, instead it takes out 114, watch out for a retest of the 113 area. Thanks for being here. Stay tuned for Larry Pesavento. Speak to you tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.